And I think, to me, that is the reason for the ban on interest in Jewish teaching. But to me, it's not an absolute ban. Secondly, so I would then go on to say there are benefits to credit markets. You looked on a lot of the downside, but what are the benefits? Well, you can borrow if you're a family in difficulty, if you're a company in difficulty, if you're a government in difficulty. You can rearrange, in technical economic terms, your pattern of consumption over your lifetime. So typically what you do is when you're young, you borrow, you take a house and so on, and it means you can even out your income stream throughout the whole of your life. And thirdly, obviously one can finance investment spending for growth. So I would say the case for the kind of monetary system which is developed is, if you look today at major transactions on the capital markets for developing countries or for projects in developing countries, then it's basically related to growth. Secondly, I have to go on very quickly. Secondly, interest is usury. The original meaning of usury was a use charge. It applied to any charge for the use of property. I think today, when we think of interest and usury, interest we think of as competitive markets. We think of basically made up of three things: a real rate of interest, which reflects the fact that money is more valuable today than tomorrow, and that if I invest the money I can get a return at what technically economists call time preference in the productivity of capital. There's an inflationary element and there's a risk premium element. Usury, on the other hand, has got an element of monopoly about it. It's an exorbitant interest rate. And examples of usury, if there's one example in the UK which we came across in this commission, if anyone wants to read this, by the way, I can send you a copy if you give me your address. For example, I remember going around an estate, a really bad estate in Liverpool, housing estate, where a lot of the buildings to start with were just boarded up. It was rife with drugs. It had endless loan sharks, doorstep lending, and so on. And debt on the doorstep suggests that the average interest rate charged is 177%. That, in my book, is usury. Paul Jones, professor in the University of Liverpool, he found, looking at the community bureaus, that rates of 164 to 903. So I think there's a great difference to me between usury and interest, and I would want to condemn usury and say whenever we see usury, we should be trying to do something about it, because people are really suffering because of it. Thirdly, there's the idea that debt is slavery. The rich rule over the poor, the borrower is servant to the lender, is one of the proverbs. I've got two examples in my slides here. One is low-income families in the UK. Typically, 3 million adults don't have a bank account. They typically tend to receive welfare benefits, live in socially rented accommodation, and be lone parents. They have very little savings. The Treasury estimates that 3 million people need access to credit markets as well. What kind of credit markets do they go to? The most likely regulated and the ones in which usury is most likely. If you look at low-income countries, then we know the situation. You've mentioned it yourself and so on. I needn't go through it again here, but the evidence is on the board. Fourth charge, credit markets lack transparency. Some are totally transparent. The market for government bonds, for example, is a totally transparent market. Others are not. And what we found in this report was, I'm in banking, I feel quite angry at banking because it seems to me that the branches of our high street banks today have become money shops where people are selling money and are incentivized to sell it in their compensation, and frankly, they don't take due care in asking, can the people really repay it? And I think that that is a great tragedy. And then you look at personal unsecured markets, and I've listed there a number of things where, frankly, it's translucent. You don't really know what's going on, and suddenly, you get a bill, and you didn't realize it. My goodness, that's the amount that they're really charging. And then finally, the poor suffer most. 3 times in the Hebrew law, the ban on it, and it's only quoted 3 times, the ban on the charge of interest. Twice it's quoted in connection with the poor. We have debt for poor countries. We have inadequate markets. What, therefore, should public policy be for the